All right. So you're welcome to this session, and I'm going to introduce you to the financial markets. Okay. And particularly, we are going to look into details what Forex is all about. So most of the time, when people say Forex trading, then you get to find out that they are trading different instruments, but still they are calling it forex trading. So the thing is that we have the financial market, which forex trading is what a subset of that. Okay, so we will talk about the financial markets and then we'll look at forex um as a main topic. Okay, my name is Samuel, but then in the trading industry my friends and my students call me Pele Boss. So if you see me anywhere, you can call me by that and then I would respond. All right. So let's get into it. So when we say forex trading, what is it about? Before then, let's get to understand the term or the word forex. So this word, it stands for foreign exchange. So foreign, so the FOR stands for foreign, and then the EX stands for what? Exchange. So this is just an acronym for foreign exchange. Okay. And then when we say forex or forex trading, is basically the buying and selling of currencies. The buying and selling of currencies, which one way or another, some of us or all of us have done this before. Okay, I believe that all of us have done this before because one way or another, a relative sent you money from abroad. They sent it in foreign currency and you had to change it to what Ghana cedis before you were able to spend it down here. You understand? So that process you went through was called forex trading. The only difference between that and what we are going to learn this evening is that we will be doing ours online. We'll be doing it with our phones or our laptops. While the other one, we took the money to either the bank or a forex bureau to change it. Okay. So what you did was that you sold your dollars to them and then you bought back cedis. So basically, forex when we talk about forex trading, it involves two currencies. So we call it currency pairs. So you traded your dollars for cedis. If you want dollars, as we are speaking now, the the CD has appreciated, and so you will get it at a lower rate compared to the dollar. If you want to buy more dollars, you go and you give your CDs to them, and then they will give you what? Dollars. So what you've done is that you sold your CDs to them, and then you bought dollars. Okay, so that's what we'll be doing. Now, Forex is the largest financial market in the whole world. Forex trading is the largest financial market in the whole world. You can do this research to confirm this assertion. Okay. Within a day, we move around over 7 trillion US dollars every single day. That is how much is moved around. When we go on, you will see the players of the market so you understand or agree to what we are saying here. Now, the forex market or the financial market is decentralized. It means that we don't have a single entity or operator that controls or runs the affairs of the market. We don't. We don't have anyone that decides how the market should go or how it should move. We don't. Okay. This is good because most of the time when we have a single entity or a single individual controlling a company, most of the time you see that they tend to be dictative. They want us to do what they want us to do and not what the masses would want. You understand? So this is what an advantage. And it is global. You can trade forex from any part of the world. So even down here, you can trade forex. And I've been doing this for 8 solid years. I've been doing it right here in Ghana. So I'm in Ghana. I'm taking part of what the global forex market, and I'm making money in dollars. And that is what we want to teach you. All right. Now, what's the goal? The goal is to make profit from currency price movement. What do we mean by this? So this is the thing. Currencies, the rate of currencies are not stable. They change every single second. Every single second, the market moves or it changes. After the theory, I'll take you to the market so you will see what I'm talking about. Okay. It changes every single second, it changes. And so we are taking advantage of either the rise or the fall. So whether the market is going up or going down, we can take advantage of what? The movement. And this is an added advantage. Why do I say this? If you establish a business, the only way you make money is when your business is what? Rising. When your business is making more profit. If your business goes down, you are losing. However, in forex trading, even when the market is going down, you can take advantage of the fall and make money. A typical example is what I just said. As it stands now, the CD is appreciating. It means that to the dollar is what dropping. What you can do is that you can buy more dollars down. Okay, even as the dollar falls, you buy more down so that when it rises, you sell your dollar back and then you make what? Profit. Okay. Same way, if you think the dollar is going to appreciate, so if you think that the CD is going to appreciate, which means the dollar is going to drop, what you do is that if you have dollars, sell it, and when it finally goes down, you buy it so that you don't lose your money, and then you even make profit in the end. Okay, that's basically what we do. Yes. So let's go to the next thing. So remember I said that Forex is what? A subset of financial markets. It is just one type of what? The financial market. So we have what we call the stock market. We have the commodities market. We have the indices market. We have the cryptocurrency market and then the Forex market. So I would explain all of them. Give me a minute. Yeah, sorry for that. Yeah, so the stock market, when you talk about the stock market, it comprises stocks like Apple stock, Google stock, what do you call it? Netflix. All the stock companies that you know, you can buy shares in them. Okay, that is the stock market you are talking about. When we go there, I'll show you typical example. But then very common ones are Apple stock, Netflix, Google, Meta, all of them. They are all stocks. Okay, then we have the commodities market. So commodities like gold, silver, crude oil, and then what have you. People trade them. Okay, so those ones also fall under this market. So if you know that crude oil is going to gain more price, what do? You buy more of it down. You don't have to go to a refinery to buy barrels of crude oil. No, you don't have to do that. You can invest with a brokerage by buying more crude oil, and then when the price finally shoots up, you sell yours and then you make profits. Okay. Then we have the indices market. So this one basically is a collection of different companies. So we have something we call US 30. Okay, so for US 30, it's what a group of 30 individual groups in what you call companies in US that have come together to form that. Okay, so you can trade that one. And then we have the cryptocurrency market. That's Bitcoin, Ethereum, Solana, all the crypto coins that you know, they also fall under this. And then finally, we have what the forex market, which is the foreign exchange. Okay, we deal with what currencies here. So here we are talking about currencies of various countries like the dollar, the British pound, Canadian dollar, Australian dollar, and then what have you. Okay, so basically that is it. Now the reason why forex market is very common is because this market especially requires what, a huge capital before you can make money. Even this one too. But then with the forex market, even as low as $5 or even $1, you can take part in this trading. You can buy a currency, hold it, and sell it later. Okay, so it means that you don't require a huge capital before you partake in this market, and that is why it is very common. Okay, so if you want to become a forex trader, these things we have here are going to be your language, your everyday language. The first one is what? PIP. PIP is the smallest price movement. So when we say that a particular currency pair has increased by 1 unit, okay, it means it has increased by what? 1 pip. Okay, and then it is denoted by 0.0001. So it means that most of the currencies they have four decimal places. Okay, and if it moves by just one, that is what? 1 pip. So if it moves by 10 units, that is what? 10 pips. If it moves by 100 units, that is 100 pips. And it is this unit that you convert into money. Okay, you will understand this later. Then we have something we called lot sizing. Lot sizing. So that is the standard trading volume. Okay, so every trade that you take, there's a volume of trade that you are taking, and that is known as the lot sizing. Kind of technical and practical. So when we get there, I will explain it better. And then we have what we call leverage. Now, the leverage, what it does is that the leverage helps you to be able to take larger positions even with a smaller capital. So if your broker is offering and it is offered in the form of a ratio, so you will see something like 1,000 is to 1, 500 is to 1, 200 is to 1, 100 is to 1, and what have you. What this is what it means. If your broker is offering 100 is to 1, what it means is that every dollar that you put there, you have what? 100 buying power. What you do is that you multiply the 100 by the dollar. So let's say you are putting $10 in your account. If you are putting $10 in your account, then it means that you multiply 10 by what? A leverage of 100 is to 1. You multiply 10 by 100, and that's what? 1,000. So though you put $10 in your account, but by a leverage of 100 is to 1, you are actually trading with what? $1,000. That's what it means. And with this, you can make a lot of money easily, and you can also lose your money easily. That's how it is. Okay. How does the market operate? Remember, I mentioned that the currencies or the forex market, they are pairs of what do you call it? Different currencies. Okay. Now, the first is called the base currency, and the second is called the code currency. So, for example, this is how they appear: Euro USD. This is what the euro paired against the dollar, and you will see the figure like something like this: 1.1000. Remember, it was four decimal places. What this means is that per every euro that you hold, it is equal to what? 1.10 US dollars. That's what it means. So as it stands now, if you do USD GHS, that is the dollar against the CD, it is equal to 11.9. I think it has even dropped again. I saw 10.7 somewhere, but I'm here to confirm with the banks. Okay. Right. So basically, that's what it means. Now we have different types of currencies. There are three actually. We have the major currencies, the minor currencies, and the exotics. We only have major currencies here because these markets are a bit stable compared to the exotics. Okay, so as a beginner trader, we recommend that you start trading these pairs. Okay, you start trading these major currencies. Okay, and then the major currencies are mostly major economies. So you see something like the euro paired against the dollar. You see something like the British pound paired against the dollar. Okay, these are all strong economies. That's why you are not seeing cities here because our economy is not strong. That's why you are not seeing Mexico. They have their currency. You are not seeing that one here because their economy is also weak. Okay, yeah. Now we have factors that influence forex prices. Remember, I mentioned that it is decentralized. No single entity controls it. However, we have factors that actually influence how the market moves. Okay. Some of these factors could be economic factors. I'll give you an example. If you follow financial news, 3 weeks or 2 weeks ago, there was this circulation that Bank of Ghana is going to inject $1.15 billion into the economy to help stabilize the city. If you follow news, you might have seen this. Now, this was 2 weeks ago, and as at the time they released it, the dollar was equal to what? 13.5. $1 was equal to 13.5. After they did that, as we are speaking now, like I mentioned, Yesterday I checked. Yesterday it was 11.9, but today I've not checked. But then I saw it on Facebook that it is now 10.7. I'm yet to verify that. What am I trying to say? That economic news that came from Bank of Ghana has impacted the price of what our currency. Basically, that is it. So if you are trading Euro USD and there is an economic news about either the euro or the dollar, definitely it's going to have an impact on how the price is going to move. So you have to pay attention to some of these things. That's what we mean. We have central bank policies. So for example, what I gave, it falls under economic indicators. It also falls under central bank policy because it was Bank of Ghana that brought out that news. Okay. Then we have political news. So political news, like when the government make changes about the economy and stuff, most of the changes affect the economy and it in turn affect the currency. For example, if the what do you call it? There's money that they pushed into the economy. Although we are saying Bank of Ghana, but before you know, somebody is behind it from government. Okay, that brought about this change. Another way you can look at it also is that whenever there is a change in government, most of the time it affects the country's economy and it in turn affect the currency. So let's say you are trading the dollar and then there is a change in power in US. Be careful because it is going to affect the market in some way. So if you know what to expect, you wouldn't be surprised when it starts happening. Then we have what we call technical analysis. So for the technical analysis, you look at what price did in the past, then you look at what price is doing now, then you base on that to project what price will do in the future. So you take advantage of that. And this is what we are going to spend most of our time on technical analysis. This is what actually moves the market. These things come and go. So we can classify these things into two. Okay. We can classify it into two. We will get there. Now, let me talk a bit about technical analysis. Remember, I mentioned that the technical analysis actually move the market. So in technical analysis, we call something support and resistance, which is something that we'll get to know more about, God willing, tomorrow. Now, support and resistance are key areas or key levels where the market reacts. So when market gets to these areas, it's either moves up quickly or it moves down quickly. That's what happens around these levels. So we are going to learn to understand how to draw or mark these levels so that when price is approaching it, we know exactly what to expect. That forms part of our technical analysis. An example is what trend lines. So trend lines also indicate the direction of the market. So whether the market is going up or going down, we can use trend line to detect that. And if we know it is going up, what are we going to do? We are going to buy. If we know it is going down, we are going to sell, and we can make money from that. Then another one is candlestick patterns. Okay, so we have that these are visual price action signals. So after this meeting, I'll send the book to the platform. Make sure you read the book. The book will talk about all these patterns. You will understand it better. So when we meet tomorrow, you will not be lost when I mention anything. Okay. Now, remember when I was talking about the factors that influence the markets, I mentioned central bank policies, political indicators, economic indicators. Those ones fall under fundamental analysis. And then we talked about technical analysis. So in trading, we have two types of analysis. We have the fundamental analysis and the technical analysis. To understand them, fundamental analysis constitutes the news impact or the influence from the news. This news can be political, it can be economical, right? And then it can be a news coming from the central bank government. Okay. Then we have technical analysis, which is price action. Remember, we talk about support, resistance, and also trend lines. Okay. As a trader, you should understand how to balance the two. And it is our job to make you understand the two so you know where to draw the line. Okay. After you have learned the basics of trading, the basics of analysis, and then all that, there is something you can't do away with. We call it risk management. Okay. Now, risk management is has to do with how you are going to manage your losses and your reward in the market. Remember, you are making projections, which means that you are using probabilities. Okay, so it is not 100% certain. Because of that, it can either go against you or go in your favor. For that matter, there are some procedures that you need to put in place. One of them is setting stop loss and take profit. So when do we set stop loss? When you pick a trade and then you believe that the market is going to go up, okay, you have to set your stop loss such that if the market doesn't go up and it in turn starts to go down, when it gets to a certain level, it will take you out of the market. You are going to lose, all right, but you're not going to lose all your money. Without a stop loss, before you know, all your money will be gone, especially when the market doesn't play according to your analysis. So it's important you understand how to set stop loss, when to set it, and then where exactly to put them. This is what we are also going to guide you to be able to do. Then take profit is how much you want to make from the market. So let's say you have $100 in your account. You are risking $10 from that. Then you have to have a reward, like a target, okay? And your target could be two times your risk, three times your risk, or four times your risk. So you can be risking $10 and be targeting $40. You understand? You have to set that. Then we have lot sizing. So the trading volume, you should have to know what trading volume you are going to use, depending on the capital you have in your account. We will teach you to know that as well. Then we have something we call risk to reward ratio. So the risks you are taking to the reward should always make sense. Under no circumstance must your reward be smaller than your risk. Always, your reward must be bigger than your risk. What you want to make from the market should always be greater than what you are willing to give to the market. And for that matter, after doing your analysis, if you find out that the profit is smaller than the loss, don't take that trade. Okay. And then we have avoid over leveraging. So don't use too big, or like use a minimum leverage. Okay. So if you have to choose between 1:1,000, 1:100, 1:10, I would advise as a beginner you start with 1:10. That will help you and protect your accounts, okay, for a long time. Okay, let's go on. So these are some mistakes that new traders make. Even after we have taken our time to take them through the whole process, they still repeat this mistake. One, they don't have any plan. So they don't have any plan, like I want to make $50 per day, I'm gone. So they keep on trading. So they can trade the whole day. Don't have any plan. And so as a new trader, make it a point to have a plan. By that, just get a book, or you can get an online document that where you keep track of your trades. Every trade that you take, write it down. The lot size you use, write it down. The stop loss you set, write it down. The take profits, write it down. Whether you win or you lose that trade, put it down. At the end of the week, assess it and see where you got it wrong so you can work on it. Without this, you can't become a profitable trader. Avoid over trading. Don't trade too much. Like I mentioned, without having a plan, you'll be taking trades anyhow. We have to avoid that. And then they don't have any knowledge about risk management, setting stop loss and take profit. It's very deadly. We are going to teach you to understand how to do some of these things. So I don't think that you are going to fall victims to this. And then they have unrealistic expectation because they saw somebody made $10,000, somebody made $5,000. They want to make the same thing. Meanwhile, for example, I've told you I've been in the system for 8 years. So if I trade and I make $1,000, don't expect that once you start trading, you will start making that. No. So have realistic targets. Today, for example, I have a colleague in UK who traded on gold. He has made close to £300,000 today. This person has been in the game for 10 years. Aside that, he is trading with a huge capital. I will not compare myself to him. When I make my $200, I'm okay because when I convert it to my cedis, that's a lot for me. You understand? Yeah, so you need to set realistic target and don't rely blindly on signals. Some people, they don't want to learn. They just be asking, where should I buy? Give me signal. No, don't do that. Learn to understand it yourself so that even when you are giving signals, you would understand it. We are going to provide you with signals at the end of the lessons, at the end of the entire training. This is the difference. Because we are going to train you, you'll be able to understand the signal that we give you. So without us, you can still trade. That's very important. Okay. Now, aside knowing the analysis about risk management and all that, we call something trading psychology. If your mental is not strong, trading may fail you. Okay. So you need to be disciplined and you have to know how to control your emotion. Okay, over here we don't cry. You take a loss, take it like a man, and then come again another day. You will make it back definitely. Okay, be patient. When you do your analysis, wait for price to get to where we have asked you to buy or where we have asked you to sell before you take it. Some people think that the market may not get there and then it will leave, go in their direction. So what they do is that they hop on it. When it finally decides to get to where we intended initially, then they lose. Okay, because by the time I get there, it has taken a big part of their money and they will be gone. You should be able to handle your fear and greed. Don't be greedy. Set a target. Once you hit it, leave the market. So I am trading a $10,000 account and I have a target of making just $200 every day. So on Monday, I made, was it $232? And then the next day, which was Tuesday, I made $258. Now, because I have made more than what I wanted to make, yesterday I targeted only $180. And today, the same thing, I made just $180, which I could have made more. But I don't want to be greedy. So I'm staying according to my plan. Okay. Then have a long-term mindset. Have a long-term mindset. Don't look at making profit overnight. Don't look at making a big, what do you call it, money overnight. It doesn't work that way. When I started trading, I struggled for 3 years before I found my breakthrough. The only difference here is that I didn't get someone to guide me the way I am willing to guide you. So I believe that you can use just a few months to get the concept and trade and become a profitable trader. Of course, I have people who I trained that after 3 months, they are good traders. After 4 months, they are good traders. Some even after 2 months, they are good traders. It all depends on you. I also have people that joined me in 2020 and they've not made anything till today. So it all depends on you. I will do my best, but if you don't do your part, I can't do anything about that. Okay. Right. Now, right after going through the entire lesson, we will help you to create what we call a virtual account or a demo account. Now, with the demo account, you are going to use that to practice. So the buy and sell we are talking about, you first use a demo to do that. When you become consistent with it, then we transition to what a live account where we are going to put real money there to start trading. Now, with the real money, you will know how to manage your emotions because now it is your own money. So when you are losing, you feel it. Okay. So we will learn how to control our emotions when we get there. All right. Now, if you want to become a consistent trader who is profitable, now we have a lot of traders who are consistent, but they are not profitable. If you want to be making a meaningful sum from here. Now, at first, when I was teaching like this, I used to show my trading history, the money I made, and then all that. I used to show it. Then I realized that that was actually giving people high hopes. Okay, I don't want to do that. I want you to, you know, free your mind, be willing to learn to understand. That's the most important thing. For the money, it will come, but you have to take your time. All right. So you have to learn continuously. If you want to become a profitable trader, learn continuously. I've done this for 8 years and I learn every day. Even today, I learn something new. So don't, right after this, you are gone, throw your books away. You just want to make money. Though it doesn't work that way. Be willing to learn every day. And I'm going to teach you all the time. As long as I'm here, when I learn anything new, I share it with my students. You will testify to this if you go on this journey with that. Once I learn any new thing that is working for me, especially strategies, they change. So the strategy I was using last year is not the same strategy I'm using now. And once I discovered that it was consistent, like it was making me profit consistently, I shared it with my students. So that's why I'm saying I learn all the time. So be willing to learn all the time. Keep a trading journal, keep records of your trading. Focus on your process. Don't look at what somebody is doing. I told you today, a friend of mine is in the US, sorry, in the UK. He has made close to £300,000 today. That is not what I'm looking at. I look at that as what a source of motivation because I believe that one day I also get there. Because the capital he is trading with, if I have half of that capital, Charlie, I wouldn't be doing this. I'll be gone. Okay. He is trading with huge fam. However, I'm still doing well for myself because if I look at how far I've come since I started, I'm doing very well. And I believe that we can also get to that level, and some can even go past that level, become the very best in the market. That's what we hope for everybody. Have a long-term view. Don't focus on what you are going to get today, what you are going to get today or tomorrow. No, don't do that. Have a long-term view. Okay, have a long-term plan. So I told the other class that if you want to make $10,000, break it down this way. Break it down into 12. Okay, that will give you how much you should make every month, and that is $833. Break that one down again into four. Okay, so sorry for the first one, it means that every month you should be making what $833. So at the end of the year, you would have made what $10,000. Break it down into four, and that is $208. It means that every week you just have to make $208. Break that one down again into five. What it means is every trading day you just have to make $41, and this is something easy to do because remember I've told you that I have a target of making $200 a day. And this week, I mean, we are only left with tomorrow. I have achieved that target. I have achieved that. Okay. It's easy to do some of these things, especially when you are disciplined. You stay according to your plan and then all that. You can do that. So you see that making your 41 per day, by the time you realize at the end of the year, you'd have made your $10,000. So have that long-term goal and not just try to make 10,000 today. Before you know, you have lost all your capital. Okay. So that's what we've learned so far about Forex. We said Forex stands for foreign exchange, and we said that it constitutes two currencies. Okay, we have the base currency and the code currency. Then we have said that we make money by taking advantage of the price movement. We also learned that we have five types of what financial markets, which Forex is one of them. We are going to dwell more on Forex because it doesn't require us a huge capital to start. We have learned that there are two main types of what analysis, the fundamental and then the technical. The technical has to do with support and resistance, trend lines and chart patterns. The fundamental has to do with what news events like political, economical, and then central bank policies. Okay. Then we have learned that if you want to be um, profitable traders, we need to have what a trading journal. We have to keep records of our trading activities. We have to know how to set stop loss and then all that. We have to know how to manage our emotions, how to control our fear and then our greed. Okay, so these are stuff that we have learned today. Now, after here, God willing, tomorrow we will start with the analysis, with the technical analysis. So with that, you'll be able to practice it on your demo account. So this is what we are going to do. I am doing this for you for free. The only thing you are going to do for me in return is that you're going to register with my recommended broker. So I will leave a link on the platform right after this meeting. Make sure you register with us. When you register, let me know. I will add you to the group for tomorrow because I said that the main lesson is going to start tomorrow. Okay. So just hit me up after signing up and then I'll add you to the platform. Okay. That's it's as simple as that. We are not going to take money from you. We are not going to take anything at all from you. That's just it. Register with our link and then you are good to go. So this is just it. But then I want to take you to the markets. Okay. So